a popular federal student loan forgiveness program for borrowers who devote their careers to public service, has undergone multiple changes over the last few years, including a major recent change currently being implemented by the Biden administration. While some of the reforms have clearly benefited borrowers, they also have resulted in a confusing and overlapping patchwork of relief. Determining eligibility, and figuring out how to apply, can be a full-time job itself. Public Service Loan Forgiveness, PSLF, was enacted by Congress and signed by President Bush in 2007. The program allows federal student loan borrowers to get their federal student loans forgiven by working for nonprofit or public organizations for at least 10 years. PSLF has had very strict eligibility criteria. The program requires borrowers to make at least 120 qualifying payments to get their student loan balance forgiven. Each of these payments must comply with several requirements because of PSLF's complicated eligibility criteria, and due to alleged mismanagement of the program by the Department of Education and its contracted loan servicers. The program suffered from extraordinarily high denial rates of 98% or more. To address some of the PSLF program's shortcomings, Congress enacted the Temporary Expanded Public Service Loan Forgiveness (TEPSLF) program in 2018. TEPSLF was designed as a fix for one of the major problems that borrowers were consistently encountering when trying to access PSLF. Being on an incorrect repayment plan. TEPSLF, in theory, allows payments made under any available repayment plan to qualify towards loan forgiveness. But TEPSLF has its own complicated eligibility criteria. Borrowers can only get relief under TEPSLF if, during the last 12 months of the borrower's 120 payments, the borrower was either in an income-driven repayment plan or, if in another plan, paid at least as much as they would have paid under an income-driven repayment plan. Importantly, TEPSLF made no changes to loan eligibility. Only direct loans qualify, not full loans or Perkins loans. So borrowers who had the right type of repayment plan but the wrong kind of federal student loan were out of luck. TEPSLF also did not change the employment requirements of the PSLF program. While TEPSLF uses the word temporary in its name, the program is not limited in terms of timing, and it doesn't have a deadline. It is only temporary in terms of congressional funding. Congress allocated a specific amount of money to fund the program, and once those funds have been used, TEPSLF is over, unless Congress subsequently replenishes it. Given the quirks and oddities of the program, denial rates remained similarly high for loan forgiveness applications under TEPSLF. According to a report by the Government Accountability Report, GAO, in 2019, only 1% of TEPSLF applications were approved. Last October, President Biden announced a sweeping new initiative called the Limited PSLF Waiver Program.